Right, Katie, are we ready to start then?
Yep, absolutely, Danny. Thanks so
great.
much.
Thanks, Katie. Well, welcome everyone to tonight's webinar on payroll tax. We know this is a hot topic across the industry, and the Primary Health Network, New South Wales Primary Health Network, felt that it was really important to get some information out to you all as quick as possible. So thank you for joining us. Before we go too far, on behalf of the Western New South Wales Primary Health Network and Brentnall's Health, I'd like to start tonight's meeting by acknowledging the people of the Wiradjuri Nation and the different nations on which each of our participants meet tonight. And for your interest, we come to you from Adelaide, and so we're on the land of the Kaurna people. I would like to acknowledge that we work on the traditional lands of many Aboriginal clans and nations, and pay respects to elders, past, present, future, and emerging, and acknowledge their continuing connection to the land, water, and culture, and ongoing contribution to help shape the life of the communities in which we all live and work and learn. We are committed to working in the spirit of partnership and collaboration with our region's Aboriginal communities and peoples to improve their health, emotional, and social well-being. I warmly welcome Aboriginal and Torres Strait Islander Australians who are participating tonight. So just a couple of housekeeping things. We've got a lot of information to go through tonight, as you would probably appreciate. There is the ability to have a question and answer session at the end, and we encourage you particularly to use the chat function to put your questions down. We will monitor any chat through the presentation and answer questions if we feel that we need to jump onto that question. Otherwise, we will save those questions until the end and work through them as well as we can. So thank you. I also just want to highlight that this meeting is being recorded so that people who could not get onto the webinar today will have the benefit of being able to access this webinar at a later date. So firstly, to introduce us in terms of Brentnall's Health, we're obviously an accounting advisory firm, but we've worked in the health space for quite many years. As a firm, we're over 80 staff. We're based in Adelaide, but we work with clients across Australia. We have at the moment at least 100 medical practices that we act for, and over 150 medical practitioners that we work with as well. So I guess one of the unique things is this diagram shows that most practices, most people work with their accountant purely focused on the financial performance side of things, their accounting, their tax, and the things that work there. Through Brentnall's Health, we're able to also support practices around their business planning, strategic planning, and making sure that they're planning for success, but also to work with practices in terms of their practice operations, things like practices assessments, etc., to help look at how their practices are operating. My name's Danny Hayden, and I'm not an accountant. So while I work in an accounting firm, I'm a practice management consultant and provide the advisory services that support our accounting team. We work with practices that are not receiving accounting and tax services for us and purely provide advisory services to those practices. But we also obviously support our clients who we do provide tax and accounting services for. Might just hand over to Shaylee just to introduce herself.
Hi everyone, my name is Shaylee Manilev. I'm one of the partners here at Brentnall's SA, and I've been here now for about 23 years, showing my age. So I started as a junior accountant with Brentnall's and worked my way through to being a partner a few years ago. I have worked with health clients for most of my career, actually. I just kind of fell into it and really enjoyed working with doctors and medical practices. So as Jenny said, I am an accountant. We obviously do accounts and tax returns for our clients, but we also work through with them in terms of practice valuations if they need it. We benchmark all of our clients against other practices, and we help them in terms of whatever they're doing, whether it's business planning strategies, if they are looking to purchase another practice, if they're looking to get out of their practice, if they're looking to bring people into their practice as owners, and also their retirement planning as well.
Thank you, Shaylee. So all of that is really to just show you the depth of what we do in this space and our, I guess, our enthusiasm and passion for working with medical practices. So the format for the rest of the presentation, Shaylee's going to go through a lot of the background detail around payroll tax and how it works. And then I'll follow up with some practicalities regarding service agreements and the important things to look for there. So, Shaylee, I think we're in your hands for a little while.
Okay, so just a disclaimer, this information is general. Obviously, we don't know your practices intimately, so it's not specific to your situation. Yeah, you should just consider the appropriateness of this presentation and the advice in it to your own circumstances, and go and speak to your own advisors. Okay, so for a long time, really, it's generally been understood that because a doctor contracts the medical practice entity to provide services for them and not the other way around, payroll tax does not apply to medical practitioners. Tenancy and agency arrangements, which is what we've always used for our medical practitioners, they're intended to reflect the fact that the healthcare practitioner is conducting their own business and performing work for the patients, although of course they do have the support of the facility provider being the practice. Sorry, went too far. Unfortunately, recent cases have created some significant uncertainty that this is actually the case, and this does have the potential to threaten the viability of a lot of practices, which we'll go through in this presentation. Okay, so we're going to look at a few key topics. Firstly, we'll have a look at, in particular, the Thomas and Nas ruling and the case that and what those key issues were. We'll have a look at what remuneration is for payroll tax purposes, whether or not that includes your doctors, independent contractors. We'll have a look at the background around what is a contractor versus what is an employee and how that's all come into play in these cases. We'll then have a look at the flow of funds, where patient fees are coming in, what some potential risk mitigation is if you're not already doing it. And then Danny will go through some key features of medical service agreements. Okay, so we'll start with the case that's caused all the controversy more recently, being the Thomas and Nas versus the Revenue Office of New South Wales. So Thomas and Nas was basically 3 bulk billing practices in Sydney that were engaging with their doctors. They had a service agreement in place. That service agreement basically said that you generate the income, we will charge you a 30% plus GST service fee, and you will retain the difference. And in the result, for that service fee, the doctors would get room rental, shared administration, and medical support. So what actually happened with this case, there's a few different implications of things, but basically the agreements didn't match up to what was actually happening. So the medical practice had all of the income coming into their practice operating account, And then they kept 30%. They ignored GST. I'm an accountant. That's not a good thing. And then they paid 70% out to their doctors. So what they were saying and what their contracts were saying were two different things. As well as that, the reporting that the practice did is in their P&L, in their tax returns that they reported to the ATO, they recorded all of the income that was coming in from those doctors as income for the clinic. And then they recorded the payments out to the doctors as contractor payments or contractor expenses. So Revenue New South Wales has basically looked at the information that it's been given from their tax returns from the ATO and said, well, you're reporting contractor payments, but we haven't got any of this in your payroll tax returns. One of the biggest problems in this particular case, which is why the doctors were kind of deemed to be contractors for payroll tax purposes, was the level of control that the practice exercised over its doctors. So there was really specific information in their agreements, even though their agreements didn't actually follow what they were actually doing, including references to shifts and the specified hours of work that they had to work and rosters. They had to a requirement to apply for leave, so they weren't just taking leave whenever they wanted it. They were also required to promote the business of the medical centre. They had restraint of trade restrictions if they left the practice, and the practice retained the patient ownership of the patient records. So all of these things, when you think about it, really do look from an outside point of view as if the practice really had a lot of control over those doctors. And that's part of the reason, along with a few other significant factors, that this practice was found for their doctors to be relevant contractors under the payroll tax provisions. So Revenue New South Wales basically said that the patients weren't just customers of the doctor, they're also customers of the medical practice, and the doctor is not only providing services to the patients, but they're providing services to the medical practice as well. So this case recently went to appeal, I think, for the second time. And it was appealed on a matter of law, which basically means that they couldn't argue anything other than whether the laws that were applied were correct. But in any case, basically that appeal was denied, and it upheld the original determination, which is basically that they had to pay 600K's worth of payroll tax back for a number of years. It is interesting to note, however, that Revenue New South Wales didn't actually include 3 doctors who were working in the clinic. They never included them originally in their payroll tax assessments. And one of the judges made a comment about the fact that there were 3 practitioners who weren't included. And they weren't included because they processed their own claims for medical benefits and therefore didn't receive 70% paid to them. They instead remitted 30% back to the clinic. Interestingly, we're not really sure if they would have actually been processing their own Medicare claims, but they had a separate bank account. So it was going directly into their bank account. I'm sure that the practice was still literally putting all of the claims through, but that wasn't really discussed within the case. So we'll talk to this a bit more later on, but in particular in regards to the payroll tax and deeming provisions, if you have a payment going out to a doctor, then that's when that payment might be deemed to be an amount that is being paid to them as a contractor. So in this case, they basically said, well, they didn't receive a payment. And so therefore, these particular 3 doctors were never included in the payroll tax remuneration numbers. So in most cases, for most of our medical practices, it's administratively convenient for all of the medical fees for all of the doctors to come into a particular bank account and then for it to be distributed out of there. But it might be that maybe that is not the best way for practices to be dealing with funds from doctors going forward. And we'll talk about that a bit more going forward. So It actually all started with the optical superstore case, which was quite a long time ago, but it was in Victoria, and that was where the State Revenue Victorian office basically held that payments to optometrists were, again, contractor payments under the contractor provisions. So basically, in this particular case, those optometrists were seeing patients, but they were also going out and selling products after seeing patients, which generally doesn't happen anymore, but it did back in the day. Again, in this case, all of the fees that they generated were paid into an operating account. It wasn't paid into a separate billings trust or holding account. It all went into the business's operating account. And then on top of all of that, the optometrists really weren't even paid based on how many patients they saw, like what income they actually billed to the patients. They just ended up being paid on how many hours they worked. So we're going to go through like what's an employee versus what's a contractor a bit further on, but looking at, you know, being paid as on an hourly basis, it pretty much just comes back to the fact that you're paying them for working for you, and hence that's why these guys in particular were included as contractors. And again, they were held to be providing services to the store as well as to the patients. So in regards to where all of these cases are coming from, obviously the New South Wales Revenue Office is now focusing on this in particular and potentially putting a bit more of their audit or review services into general practice. But originally, all of this information is coming out because all of the offices all over Australia are data matching. Basically, a whole lot of information gets sent to the ATO, whether that's STP or in your tax returns. You're lodging work cover with the relevant work cover bodies, and if you're already registered for payroll tax, you're lodging remuneration for employees with the payroll tax office, and they all talk to each other effectively. Particularly with STP now and live kind of wages information going to the ATO. I had work cover ring me a few months ago. We'd set up a client and changed their structure. So they'd moved from operating through a trust to operating through a company, and we'd moved all of their employees over. But we hadn't registered the new entity for work cover yet. But they rang me and said, oh, we can see all this STP stuff going through. Why haven't they registered for work cover? So they're all talking to each other, and you need to be aware of that. So it's really important that what you include in your tax return, in particular around contractors, because there's a specific code that you include in your tax return for contractors, is correct. If your doctors are not contractors, they really should not be being included in your tax return in the contractor section, because that's just going to increase your risk of being audited. So payroll tax is a state-based tax. However, the underlying legislation that we'll look at is harmonised across all states except WA. So basically every state is following the same rules, which is why cases in Victoria or cases in New South Wales are not just concerning to those particular states, but they're concerning to every state in Australia, except potentially WA. But each state then has control over what their thresholds are and what sort of payroll tax they charge. So New South Wales, your threshold is 1.2 million, and you'll pay tax on anything above that at 4.85%. So it is important to note that if you're a relatively small practice, maybe 2 or 3 doctors, and the amounts that are paid to your doctors being the 65, 70%, whatever it happens to be, plus what you're paying to your nurses and admin staff, if that's going to be under 1.2 million, this legislation, this is not going to be a concern for you. You don't need to worry about it. You're not going to get above the 1.2, and so there's no need to be concerned. Obviously, there's a lot of practices with a few more doctors that are going to be above the 1.2 or might already be above the 1.2 million, and therefore this is a big concern. So just quickly, when we're looking at payroll tax and what is remuneration for payroll tax purposes, we obviously have employee wages, we have employee superannuation. If you're paying fringe benefits to any of your staff, or if they're salary sacrificing for anything, that all needs to go in. And then there's also these relevant contractor payments. So we will talk a little bit more as the presentation goes on about what is a relevant contractor. for payroll tax purposes. But firstly, we're just going to have a look at some of the differences between employees and contractors and independent practitioners, because I think they're almost three different things. So it's not actually that easy to work out what the differences are between employees and contractors, but depending on who you're employing, your obligations are obviously going to be different. So if you're employing employees, then you need to factor in things such as pay-as-you-go withholding. You need to think about payroll tax, superannuation, your fringe benefits tax if relevant, workers' compensation, and you need to have a look at the Fair Work Act. If you're employing an independent practitioner, none of those really should apply, except that somehow payroll taxes got brought into the issue. So as I said, it's really not clear, like you can't just go, yes, they're an employee, yes, they're a contractor. It's not that clear whether somebody is an employee or a contractor. An employee is not really defined in any legislation. And so generally what we're using to work it out is case law, and therefore what the ATO kind of comes up with on their website based on what that case law says or what they would like it to be. So they do have, the ATO does have an ATO, usually have an ATO contractor versus employee tool, which we've used in the past in some circumstances to work out whether or not we believe, say, one of our businesses is employing someone and whether that should be an employee relationship or whether it should be a contractor relationship. At the moment, however, the ATO decision tool is not working. They've suspended it due to a February 2022 case, which is around, it's the CFM MEU versus personal contracting versus JAMSEC case, and that is impacting the ATO advice and guidance around classifying workers. It's kind of changed a few things from a case law point of view. So they're basically looking into that still and the impact that that's going to have on the worker classification. So they've published a decision impact statement, which you can go and have a look at if you want to. But at the moment, all we can really go back to is having a look at the terms and conditions under which the work is performed and having a look at the different key factors in determining whether or not we've got a contractor versus an employee, and then working out what we think is most appropriate. So, as I said, recent cases have really shifted attention to whether there's a formal agreement in place, and if that agreement is standing up and is what's actually happening in practice, then courts are going to put a lot more onus on what's in that agreement. Okay, so there's quite a few factors to consider when you're looking at whether somebody is an employee or they're a contractor or independent practitioner. So one of the main things which we've talked about a little bit already is control. So control is actually one of the bigger factors. So as an employer, you would expect to have a fair amount of control over your employees. You would expect to say when they need to come to work, what they need to be working on, how they need to do their work, and when they can have leave. As an independent practitioner, generally from most of the practices that I've talked to, most of their independent practitioners are going to tell them when they want to work, they're going to tell them what days they are working, and they're going to tell them when they want to have leave. So really, the practice shouldn't really have a whole lot of control over whether those practitioners, what those practitioners are doing. They certainly don't have any control over how they're performing their services to their patients, which isn't in disagreement. And the only control really that a practice might have is what room is available to the practitioners on particular days, possibly. But that's really more about facility management rather than anything else. Independence is another thing that's a big factor. So in this case, an employee is working for the business and their work is seen to be an integral part of the business. This one's probably a little bit difficult from a medical practice point of view, just because you could certainly say that having those doctors in the practice is an integral part of running a medical practice. Even though you're providing facilities management to those doctors, that practice really wouldn't be there if you didn't have those medical practitioners in it. So an independent contractor would more be seen to be the work being done for the business, but not integrated into it. And I think that's a bit of a grey area, particularly if you've got registrars working for you, because they're obviously providing medical services for the practice to their patients. Even as much as nurses are providing services for the practice to the patients, although you could argue that nurses are actually providing services to the doctors rather than to the patients. Bit of a grey area. Payment is a big one. So as I talked about in the optical superstore case, if payment's based on time worked, then really it's going to look a lot like an employee. They might get commissions or bonuses or something related to specific work they do, but generally it's going to be based on the hours that they work for you. For an independent contractor, we've always been, well, doctors are getting paid based on the patients that they see. But I think it is a little bit more difficult to argue that if you're just getting bulk bill Medicare rates, because really the Medicare rates schedule is based on how much time you spend seeing a patient. Tony might disagree with me there. So yeah, whether or not the payment is specifically related to time is possibly a little bit more of a grey area in that particular circumstance. From a commercial risk point of view, I do think that independent practitioners hold the commercial risk. You know, we require them to have their own indemnity policies. They're the ones that are responsible if something goes wrong with some advice that they've given a patient. In saying that, sometimes a practice can be bought into those sort of things as well. But generally, the risk side would fall more on the side of those doctors being independent practitioners. The ability to delegate one is another difficult one. Generally, an employee is told what to do. They can't then go and delegate that job to somebody else unless their employer has told them that they can. For an independent practitioner, they're obviously usually the ones that are providing the services to the patients. They can't really delegate that service to anybody else unless it's another doctor who has the relevant qualifications. So that one, again, is a little bit more difficult to factor in. And then the tools and equipment one, in most cases, if you're an employee, your employer is going to pay for all of the equipment that you need and provide it to you. Obviously, doctors provide their own doctor's kits. However, when they go into a practice, they are generally provided with everything else. So a screen, a computer, a desk, potentially equipment if they're doing procedures, that sort of thing. So again, it's a little bit of a grey area. Okay, so what that all means is that you really need to look at each person on a case-by-case basis. If they have an ABN, that doesn't automatically mean that they're a contractor. Obviously, all of the doctors would have an ABN of some sort, whether it's in their own name or through an entity. You still need to consider the nature of your individual agreement with that worker. If they are a contractor, trust or partnership, they are definitely more likely to be treated as a contractor, a legitimate contractor. However, if that structure is just put in place to avoid an employment relationship or to avoid paying tax, then it's very likely that the authorities are going to look through that structure. I think it should be noted that the standard tenancy and agency agreement that is used for most GP practices shouldn't result in independent contractors being deemed to be common law employees, and that is what we believe. However, that's not necessarily what the New South Wales Revenue Office believes, although the cases that we've seen are cases that have got a whole lot of problems going on with them. So we haven't seen a perfect test case where we've got a perfect practice set up perfectly and the Revenue Office reviews them and says, "I know you're fine." Unfortunately, well, not that I'm aware of. The partnership one, though, potentially is one of the exemptions. If you have 2 or more people working in a partnership, you are likely to get out of, not get out of the contractor provisions so much, but be able to use an exemption. We'll talk about that a bit more as we go on. Okay, so what exactly are relevant contractor payments? It's basically where you look back at all of those factors that we previously discussed and say, this particular person is really more of an employee because the balance of factors says that they're more of an employee than a contractor, and where they're essentially just providing labour services. They're also going to be a relevant contractor if they work exclusively or primarily for one principal. So if your practitioners are found to be contractors under these relevant contracts provisions, then for payroll tax purposes, payments made to them will be deemed to be wages unless there's an exemption available. In regards to those factors, are we an employee, are we a contractor? The New South Wales Revenue Office definition of relevant contractor, they have actually issued a practice note back in 2019, which references back into the ATO definitions of employee versus contractor. So the stuff that we went through before is quite relevant. It takes into account all of that stuff in the previous slides. But what Revenue New South Wales is then saying is, we don't necessarily believe that these doctors are not just providing labour services. And if they're only working for you, then we believe them to be contractors, relevant contractors, which is effectively deeming them to be employees for payroll tax purposes, not for any other purposes. Okay, so if you believe that the payments you're making to your contractors are contractor payments, and there will be some circumstances where they are contractor payments, then there's basically exemptions available to mean that you can exclude them from payroll tax remuneration. So the first one that is quite relevant to medical practice is the 90-day exemption. So if you have a doctor come in and work for you for less than 90 days, and that's actual days, so it doesn't matter if they're doing half days or full days, then you don't have to include them in your remuneration for payroll tax purposes. So this is probably relevant where you're employing locums that, you know, they might just come in for a few weeks or a couple of months or something like that. You don't have to include those the payments you've made to those locums in payroll tax remuneration, even though you probably would have recorded it in your financial statements as either a contractor payment or a locum payment or something like that. The other exemption that is relevant for medical practices sometimes is where a doctor is engaging someone else. So if you're working through an entity and you have an employee, if you have doctors that are employed through a company or a trust and they then employ other people within their business, or you have two doctors working in a partnership or something, both of them are working for you, then if there's two or more people providing those services, you'll get an exemption for the payments that you make to them. The other one that is, we believe, relevant, and we've always thought is relevant from a independent practitioners not really being contractors point of view, is that they are ordinarily rendering services of the same kind to the public. So obviously doctors are rendering services to the public, they're providing patient services. Revenue New South Wales, however, doesn't necessarily agree with our definition of who they're rendering services to, and that's where this one is not getting all of our doctors out of these provisions as an exemption. We'll talk about that a bit more as we go on. There's some other ones in there as well. So, you know, if you have contractors come in and build you a room or something like that, they're going to be exempt because it's not something that your business normally does. But in any case, so Revenue New South Wales has issued they've got a draft practice note out there. It's not available to the public, but they have released some of the information around it. And I think the Queensland Revenue Office has then written their ruling based on it. But what they've basically said is that if we're looking at when a healthcare practice arrangement will be a relevant contract, The fact that a contract between a facility provider and a healthcare provider may state that the healthcare practitioner is providing patient services and the facility provider only provides administration services to the healthcare practitioner, which is what most of our agreements would be saying, does not prevent the application of the relevant contract provisions if the facility provider is able to exercise operational or administrative control over the services provided to patients, or is able to exercise control over the services provided by healthcare practitioners, including decisions about who practices at the centre, when they practice, and the space within the centre that occurs. So generally the first one is probably not something that would be an issue for most practices. If your doctors are fully independent, they are going to be exercising operational or administrative control over their services. They're going to be providing the services to the patients. However, the second one is a bit of an issue because obviously the practice is going to be deciding where that doctor can practice within their practice, within the centre, and they're going to be saying that this room's available on this day or not on this day, things like that. So that one is a bit of an issue. What they're trying to ascertain is whether the healthcare practitioners are truly carrying on a business independent from the facility provider, or instead are working for the business of the facility provider. They've also said that the collection model is irrelevant. So this was part of their practice note. They've basically said that even if you pay all of your doctors into individual bank accounts and they're made directly to the practitioner from Medicare, they will potentially still consider net fees to be taxable wages. So that actually does go against what the judge said in the Thomas and Nas case, because those were payments directly from Medicare to the doctor's bank accounts. And the judge said that they weren't included because they weren't a payment. They didn't get included under the payment rules of this particular clause. There has to be a payment to the doctor for it to be included in, generally, for it to be included in your payroll tax remuneration calculations. What New South Wales has also said is that to satisfy the exclusion for providing services to the public generally, the practitioner must provide services of the same kind to patients of another business. So they've basically said it doesn't matter that you're providing services to multiple patients, because it's all within one practice, it's therefore considered that you're only providing services to that particular clinic. So therefore, if your doctors are working for another medical centre or they're working for a hospital, then they would be eligible for the exemption. The problem with this exclusion is that you need to have information on those doctors and the financial information that they're getting from those other clinics and hospitals to be able to provide to Revenue New South Wales if they're reviewed. Now, what we're basically suggesting is not necessarily going and asking all your doctors for that information, because they're very unlikely to give it to you up front. They may give it to you if you tell them that you're having an audit. But we're basically saying that with all of your doctors, when you have new ones coming into the clinic, or even the ones that you already have there, that you're basically documenting where else they're working and what that time is. Like, so if it's 2 days in your clinic, 2 days in another clinic, 3 days in your clinic, 2 days in a hospital, having some sort of documentation around whether those doctors are working for somebody else. Okay, so after the New South Wales draft ruling and the cases that have been about, the Queensland Revenue Office then more recently put out a public ruling. So this one's available on the Queensland Revenue website, and they have basically said initially back in December 2022 that if a medical centre engages a practitioner to practice from its medical centre or holds out to the public that it provides patients with access to medical services of a practitioner, which obviously they're all doing, it is likely the relevant contract provisions will apply to the contract with the practitioner unless an exemption applies. So they're basically saying you're most likely to be caught, but then if you have an exemption, you can get out of it. They've said that practitioners have professional responsibility for the medical care, so they've agreed with that, and advice that they provide to patients. And the services provided by practitioners are provided in the course of their own businesses, so they are acknowledging that they have a business. However, if the medical centre has operational or administrative control over the practitioners, if it is able to influence matters such as who practices at the centre, the hours and days when they practice, and the space where that occurs, then they're likely to be, again, under the relevant contract provisions. So we also need to document the fact that our practitioners have control over what days they're working, that they've, told you when they're going on leave as opposed to asking you for leave. We'll talk about that a bit more later. So after that ruling came out, there was a fair bit of pushback in the industry. And in February 2013, the Queensland Revenue Office announced a payroll tax amnesty for general practices until June 2025. So they've basically said that they're not going to go back. In between, they said they weren't going to go back further than 2022, but now they've said they're not going to look at anybody until 2025, as long as you register for that amnesty. Interestingly, in regards to these exemptions, just in regards to getting an exemption from the relevant contract provisions, Queensland has a requirement for medical practices to apply for the exemptions, which I don't actually believe is relevant in any other state that I'm aware of. So that's interesting in its own right. You can't just assume that your doctors would be exempt. You have to go and apply for that exemption. And then you're also having to register for this amnesty. Now, we're aware that the AMA in New South Wales is advocating for a similar amnesty in New South Wales, but there's a lot of people out there that are concerned about the implications of that registration in Queensland, and whether or not practices are therefore effectively admitting that they are employing contractors for payroll tax purposes. Because then you're just going to have someone coming and knocking on your door after 2025, which is obviously not what we want. Okay. So as I said before, New South Wales has a payroll tax threshold of 1.2 million, and you pay payroll tax on everything after that at 4.85%. So we're just going to go through some examples of what we believe is the way that a proper independent contractor income is reported in your financial statements and tax returns, and the way that it's done incorrectly. So in this circumstance, we're looking at a practice that is generating around about $4 million in patient fees from its independent practitioners. It's also got some registrars that are generating around about $400,000. And so the independent practitioners are paying in service fees of 35%, being this 1.4 million. So this is a tenancy and agency arrangement, is the one that we've always gone on. The practice is then paying out $200,000 to its registrars, and it's also paying other wages and super, etc., to their administration and nurses of $800,000. So they've got total expenses, total remuneration for payroll tax purposes of $1 million. This practice has got remuneration below the threshold of 1.2 million, and therefore shouldn't have any payroll tax payable. If, however, the practice had all of that income going into their operating account, they were recording all of that income, the $4 million, as income, patient fees, then after adding in the registrars, you'd have total income in this clinic of 4.4 million. This is how Thomas and Nas were reporting. So it wasn't in line with their contracts, but they were reporting all of the income from all of their doctors, except for those 3 that had the amounts going straight into their bank accounts, in their financial statements and in their tax returns. So they then reported contractor payments being the 2.6 million. Obviously remuneration to their registrars, remuneration, admin and nurses. So all of a sudden we've gone from the circumstance where we've got $1 million in remuneration to a circumstance where we have got $3.6 million in remuneration. That's obviously over the threshold, and therefore we have to pay payroll tax on $2.4 million at a tax rate of 4.85%. We've got payroll tax payable of $116,000. So even if the doctors were correctly had correct contracts, they were doing the right thing, GST was correct, all of that sort of stuff. In this particular case, your reporting is all wrong. And this is what you're sending to the ATO. And this is why you're going to get reviewed by the Revenue Office, because you've got contractor payments being included of 2.6 million. And even if those contractor payments are exempt, they're going to want you to tell them why they're exempt. So in summary, although the net profit in this particular clinic is the same, if you're reporting somebody as an independent practitioner, your income's a whole lot lower, your expenses are a whole lot lower, and you don't have payroll tax payable. It's not just the way it's being reported, though. You know, there was a whole lot of other factors in that Thomas and Nas case. It was all going into their bank accounts, and they did have an awful lot of control over their doctors. Okay, so I'm not exactly sure how all of your practices are set up, but when we work with practices, we try to ensure, and always have, that they effectively have a bank account that all of their doctor income is going into that is not an operating account. It's a separate account. We've always called it something like a billings trust account, so that it's potentially not even anywhere. It's not in their financial statements. It's not recorded anywhere, but it might also be completely separate to their accounting software as well. The Thomas and Nas case, which is obviously a higher risk arrangement, basically had all of their patient fees going into their practice bank account, and then they paid their doctors out of that. They paid all of their other costs out of that, but it was all going into their practice account. We believe that the lower risk arrangement, and it's not no risk, but it's hopefully a lower risk arrangement, is where you do have that separate billings trust bank account. Patient fees go in there, your doctors get paid out of it, and then any service fee on that amount, or the registrar patient fees, even the registrar patient fees we don't have going into an operational account. We have them all going into that separate billings trust account. They then get paid across into the operational account for the practice, and all of the costs then get paid out of that. So this sort of proper setup has not really been in any of the course cases that have been tested. And that's one of the issues with these cases. We can't just say, oh, well, everybody's the same, because everybody's not the same. They've got a whole lot of factors that are not right, and they've therefore led to the court saying, yes, you're a deemed employee. So we believe this is a lower risk, but not guaranteed situation. There is still a risk, particularly with the New South Wales draft notice saying that it doesn't really matter where we think your money's going to, we're still going to include it. Still a risk that your doctors will be included as relevant contractors, but at least you haven't put them in your financial statements as contractors and payments to contractors. In regards to the separate bank accounts question, so we've had lots of people say, oh, should we go and get separate bank accounts for all of our doctors? Potentially that does decrease the risk even further based on the judge's comments in the Thomas and Nas ruling. However, as Revenue New South Wales has said, they basically are saying if you're only setting that up for the purpose of avoiding payroll tax, then we're going to look through that. Now, that's potentially not going to be the only reason why clinics are setting up separate bank accounts for their doctors. We've talked about it a bit recently. Most of our practices are still doing the separate billings trust account. But if it worked out that all of your doctors have separate bank accounts, I would be saying that's fine as long as you're not managing them. So the money goes into the doctor's accounts. You're still obviously doing the payments within your practice management software, but you're not going in and figuring out whether all of those payments have come through. If the doctor's not checking that, that's not really your problem. The only issue that you do have is you then need to charge the doctors the service fees and make sure that you're getting that back from them. Whereas previously you've kind of had control of that money and you're only paying them the amount that they're due. So yeah, it might diminish your risk a little bit. Is it worth the extra work? Maybe, maybe not. Okay, I think Danny's going to take over here.
Great, thanks, Shaylee. I think you've earned a little bit of a break going through all of that. So I guess as Shaylee said, in the Thomas and Nars case, it wasn't just around the financial factors that determined the outcome of that case. There were also quite a range of non-financial factors that were taken into account when determining whether the independent practitioner arrangements there were deemed to be relevant contracts and attracted a payroll tax liability. One of those was around the website, and in that website, it depicted the practitioners as being employees or staff of the practice. And we often see this with practices when we look at their website, that they list their practitioners under a title that says our team or our staff in a variety of ways. So really, for practices, they need to be checking their websites and ideally listing their practitioners separately. One of my practices lists them as independent practitioners specifically, and then all of their doctors, and then they talk about their employees and list their employees under a separate tab. They shouldn't be listing their practitioners as our practitioners, which has a sense of ownership about it. Also in the Thomas and Nars case, there was, as Shaylee has talked about, they clearly held operational control over their practitioners, and the obligation of practitioners to comply with policies and procedures was a compelling factor in that case and really should be avoided. The other part of that in terms of control was about the management of leave. And we know that for medical practices, managing doctors' leave is a constant challenge, trying to make sure that you've got sufficient workforce at any point in time. But really, independent practitioners should have the freedom to determine their own availability. So in practical terms, though, it would be probably accepted that the practice might request that the independent practitioner at least provides them with reasonable notice that they intend to take some leave, but it certainly should not extend to a requirement that they seek approval for taking leave. So practices really should be careful about the language that they use and how that, in your practice meetings, how that is documented as regards to how you're managing any leave within your practice. It's also important that independent practitioners have the right to set their own fees. It's appropriate for independent practitioners to charge the same fees as proposed by the practice, so they can choose to do that, but they should not be obligated to do that. If they wish to have separate schedule of fees or apply a different fee policy, independent practitioners should be allowed to do so. Now, in practical terms, we know that creates all sorts of confusion for your staff. It also creates confusion for patients. But the reality is that that's how this should be applied. We also, again, in your practice meeting minutes where you do discuss your fees, it should be made clear that the independent practitioners have accepted the fees that have been proposed of their own volition, or should otherwise be advising management of the fees that they wish to charge. So really being careful about the control. The other thing that Shirley talked about, which was really important, is about the agreements. We still come across practices where there are either no agreements in place, or often the practitioners haven't signed off the agreements. It's really important that agreements are in place, they're signed, and they're contemporary. The recent case laws have indicated that robust agreements will be a significant factor that's taken into account when considering the viability of the arrangements that are in place. The validity of those arrangements. So if the agreements are poorly written, the courts are going to look beyond them. And that's one of the reasons why it's important not to try and just pick an agreement off the shelf, to be sharing agreements. The agreements need to be specific to the circumstances of your practice and reflect how the practice is actually operating. So we highly recommend engaging appropriate legal advice when preparing your independent practitioner agreements. And if you haven't reviewed your agreements recently, we strongly suggest that you do so now. So in light of some of the aspects of service agreement, I'm going to now just highlight some of the aspects of service agreements that we think are particularly important to take notice of. So firstly, the collections of funds. That the collections of patient fees is a fundamental part of the administrative services provided to the practitioner. Now, in the Thomas and Nars case, the judge suggested that the practice was not collecting fees on behalf of the three practitioners that were not included. But we're not quite sure how that's actually managed in practice. But in most situations, the service agreements have written into them that the practice, as part of the services they provide, they collect the fees on behalf of the practitioner. Along with that, the service agreement should also list all the other services that are provided by the practice on behalf of the practitioner. The other really crucial part, we'll move on to the next slide there, Shirley, is the consistency of how the funds are managed and accounted for in comparison to your service agreements. And in the Thomas and Nars case, it was clear that the way in which the funds were managed was not consistent with the way in which the service agreements were written. And we've provided this example here of a service agreement. And in this agreement, the practice was to charge a service fee of 35% plus GST to the practitioner. But when we looked at this in closer detail and investigated, we actually found that the practice was paying the practitioner 65% plus the GST. So in some respects, the service agreement is based on the principle that the practice is paying the services to the practice is providing services to the practitioner, and hence the GST applies to the service fee. But the way this practice was paying the practitioner, with the GST being applied to the practitioner's payments, was that the practitioner was actually providing services to the practice. So that didn't align with how we would see a normal service fee arrangement operating. So this practice was also accounting for all of patient fees as income and paying the practitioner's remuneration as an expense, in the same way as Thomas and Nars were doing so, and in the same way that Shaylee had demonstrated to you before. So all of that added up to that practice really paying their doctors as relevant contractors and potentially being deemed as employees for payroll tax purposes. This is another example of a different practice that we reviewed and their service agreements. And we use this to highlight the caution of the obligations that are imposed on the independent practitioners within the agreements. as explained earlier, exercising control over the practitioners and their work obligations is a major risk factor. So the independent practitioners should be free to determine their work commitments, such as the days they work, the hours they work, and any absences that they have. So in this agreement, it specifies quite clearly the amount of the days that they're going to work, and also the limit of annual leave that they were able to take. So this example is quite prescriptive about the obligations of the practitioner, and is really not consistent with what we would consider an independent practitioner arrangement. The other influential factor in the Thomas and Nars case was in their agreements that they had restraints in play, and which limited the ability of practitioners to provide services elsewhere. And this was viewed as the practice, again, exercising control over the practitioner that was not consistent with the independent practitioner arrangements. So we suggest that if your agreements contain these types of restraint clauses, that you seek advice about having those clauses removed. So there you have it. We've come to an end of quite an extensive presentation for you tonight with a lot of information. But I think what we've seen from what Shaylee has provided to you and the additional information that I've offered is that there is still a lot of grey in terms of the interpretation of payroll tax, rather than it being a black and white issue. And that's why it's really important that if you're engaging independent practitioners, you understand that there is a risk that those payments to the practitioners could be included in your remuneration for payroll tax purposes. Our approach with practices has really been to encourage practices to firstly seek guidance from your advisors. Ask your accountant and your legal advisors to review your circumstances and make sure that they are appropriately set up, and that the way in which your practice operates is consistent with the agreements that you have in place. It's important to also ensure that you're reporting correctly, as Shaylee has demonstrated, in your financial statements and your tax returns. That's going to reduce the risk of red flagging with the State Revenue Department. Also ensuring that your service agreements are sound. We encourage practices to check the management of their patient fees and the payments that are made to their practitioners, and make sure that they are consistent with those service agreements. The other part is to really look at eliminating the practice's control and any, I guess, images that imply that there is an employee relationship between the practitioner and the practice. It's also important to keep documentation of whether your doctors are working at other clinics and hospitals, as Shaylee has said. And Shaylee, do you want to talk about rural practices where they might work with local hospitals?
Yeah, we were having this discussion the other day, Danny and I, because a lot of our clients are rural practices and they have a contract with the local hospital to basically coordinate their doctors working in the hospital. So from a revenue point of view, or a revenue office point of view, it looks like those doctors are really only working for that particular clinic. And, you know, in a rural town, it's unlikely that they'd be working for another clinic as well, quite possibly. But they are working for the hospital. It's just that due to, at least in South Australia, the hospital regulations and requirements, the contract has to be made with they don't contract with individual doctors. They contract with the local practice to get those doctors all organised to provide all of those services. And if you're looking at those services, they're really not being provided on site. You would totally say that the doctors are, how could you say the doctors are providing services to the practice as well as to the patient? They're providing services to the hospital. They're certainly not providing services to the practice. A lot of those patients wouldn't even be patients of the practice necessarily if they're just travelling through and happen to need the hospital that time. But that's a really difficult one because, you know, do they actually meet those exemptions where they're also working for the hospital when the contract is through the practice and therefore the practice is distributing those funds out to them based on the work that they're doing in the hospital? I don't know the answer to that one. It's an interesting question.
Thanks, Shaylee. And I think it may be a different structure in terms of how doctors are engaged in New South Wales. So it may be if they are independently contracted, that would then enable them to be considered exempt because they're working for a different entity to the practice. So that's something for you to consider in your practices, that if your doctors are working for the hospital and contracted externally with the hospital, that there's a fair chance that that may mean that that arrangement would be exempt for payroll tax purposes.
If it got caught in the first place, which hopefully it wouldn't.
Yes.
But that's where you need to have your documentation. So you need to know that those doctors are doing after hours or whatever work in the hospital, and how much, like what sort of percentage that is for them in terms of like working time. Obviously, they're not going to give you actual information in terms of how much they're being paid, but how much time are they working for you and how much time are they working for the hospital?
Great, thanks, Shaylee. And our final point there is that you do also have the option of employing the doctors, and some practices we know are moving towards more employment arrangements, adjusting their service fees accordingly, but then understanding that they are taking on responsibilities as an employer in those arrangements, including paying for superannuation, etc.
And payroll tax.
And payroll tax. So having to factor in all of those on costs, it's really quite a lot to consider. And when we were preparing for this, I also thought about one of the practices that I'm aware of where their approach is that everyone who, once they're fellowed and the doctors stay on, they offer partnership to any doctors that stay and work with them. So all of the practitioners working in the practice who, other than registrars, are actually part of their partnership, and that would then also assist them to minimise their risk. Yeah,
partners in a partnership aren't included for payroll tax purposes under any circumstance.
So that comes to the end of our presentation. I've been checking the chat section. We don't have any specific questions in there other than will the presentation be shared? And yes, that presentation is going to be sent out as a PDF tomorrow, so you'll have access to the details of that. There is another question in here. Pavan is asking, are there any guidelines for doctors being employees, e.g. pay award? So is there an award that applies to doctors as employees?
No, I don't believe so, other than obviously where they're employed under registrar provisions or whatever. Generally for the practices that have chosen to employ their doctors that we're aware of, they generally have a lower percentage effectively, and obviously what they're being paid means that they're then getting super, they're paying work cover for them. They're generally paying payroll tax because they are some larger practices that are doing this. So they're kind of aware that they're taking a little bit of a hit in terms of extra costs, but they actually want the control, being able to have doctors available and not, you know, not just having them all leave when it's school holidays when they have children. So they've done it for a reason, and that reason is control, and therefore they're definitely employees.
Thanks,
But it's
Shaylee.
up to the practice is what I'm trying to say. Sorry. So different practices have different rates. You probably just need to negotiate it with your doctors if you are looking to move them to employees. And different practices have different rates for different doctors as well in some circumstances. And they also have different rates for different services. So if they're providing less support potentially because it's hospital work or something, then they might have a lower, the doctor gets a higher percentage effectively.
Thanks, Shirley. There's another question about what about doctors that come in as a work visa, and I'm aware that there are doctors who have come in on visas and worked as independent practitioners, but I guess the thing that would concern me about that is that those practitioners are required to have supervision, and so as they're required to have supervision, it's really possibly hard to validate that they're an independent practitioner. And it's also important, I think, the new independent pathway through the REC GP has moved away from saying that the practitioners need to be engaged to saying that the practitioners need to be employed. I don't know whether that was specifically changed for this reason, but it is important to have a look at the detail of that. So I don't know that there's a conclusive position on doctors working on visas, but I would suggest that it would be erring on the side of caution that they really should be employees. So thank you for all the questions that are there. Just to, Shaylee's put up on the screen, we've got, if you want to scan that QR code, we do a quarterly newsletter that provides broad information around finance, tax issues, etc., but also a focus on health. You're welcome to scan that. We don't spam people, so it's more there for your information if you're interested, and we welcome you to subscribe of your own free will. So we'll leave that one with you. And the next slide is important from the Primary Health Network's point of view. We would love for you to also scan this QR code and to provide some feedback on the webinar today. It's important for the Primary Health Network to know whether the webinars that they're providing for you are helpful. And it would be great for us to get some feedback from you about what you found helpful, or areas that we could improve on this presentation in future. We would love your feedback and be keen to receive that. So for now, I think we have come to the end of our presentation and the webinar. We thank you very much for staying with us through such a long webinar. But we hope that the information we've provided with you has been extremely helpful in your situation and has helped to clarify what is a very complex issue and is going to continue to wade out, I think, over the course of the next months or years in terms of complexity. It'll be a while, I think, before we have real clarity about how the payroll tax laws really are going to operate across the states in Australia. Shaylee, did you have anything else to say finally?
No, so we will, I think the presentation will be emailed out in PDF tomorrow, I think, by the PHN. So if that code didn't work for the newsletter, hopefully it'll work on the PDF and you'll be able to use it there. But other than that, no, thank you for listening. And if you have any questions that you want to ask individually, please feel free to send them through to the PHN and they can forward them on to us.
Great. Thank you, everyone, and good night.
Thank you.
Thanks, Danny.
Cheers, Andrew.
Thanks, team. Thanks.
Thank you all so much.
Everybody.
Have a lovely evening.
Thanks all.